Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, June 9th, 2009. Well, we're seeing a mixed day on Wall Street again. In fact, the markets have just turned positive across the board, with the Dow up 7 points, then the NASDAQ up about 17 points, and then S&P up about 3.5. And what you can see here is a little push at 1 o'clock today as the auction, the 3-year auction just went off, and it went off very, very well. That was not a surprise, though. The market should not be surprised by this. The short-term bonds are not the question here. It's the longer-term issues, the 10-year tomorrow, the 20-year, the 30-year. The longer-term debt of this country is what really people are concerned about, and I think that's for the problem. But in any case, what you are seeing here right now, folks, is a move up in the markets, a very firm bid in this market coming in off of a beautiful in-spirit of bull flag pattern. And an in-spirit of bull flag pattern is always categorized by a nice green candle like this, and then inside bars. Notice inside 1, 2, 3 inside bars inside this green candle, and that yields a good push up. Look at the extension move that we just had on this market. So be aware of that, folks, is that's an exact example of an in-spirit of a bullish flag pattern there, and a beautiful one at that. Now, what we saw today, there's been a lot on the plate today. This morning, economic news-wise, there wasn't a whole lot. We had wholesale inventories at 10 a.m. Eastern Time. But the real interesting thing about this market, folks, is that you got a little bit of a push-up on the banks early when it was announced that there were 10 specific banks that were going to be repaying TARP money to the government and the Treasury, and that has now been disseminated amongst the market. So you got stocks like Goldman Sachs, J.P. Morgan, State Street, various other 7 other banks out there, including Morgan Stanley and a few others, that are going to be repaying TARP money. So that's about $68 billion that would be returning to the TARP program. Now, the interesting thing about it is that money, it looks like, and again, interestingly enough today, I heard that there's a loophole that was said in the contract for TARP, or in the legal jargon of TARP, that enables them to actually lend that money out and use it for other purposes. So it doesn't look like the taxpayer is really going to get any of that money back, and not at least in the near term, which is kind of interesting to say the least. But the real key today, folks, is why the market's up a little bit. And simply put, folks, it's as easy as saying this: dollar down, market up. That's it. Dollar down, market up. What's the UUP doing today? UUP, which is the dollar index, here's where it closed yesterday. Look at where it is today. Just hit off the 200 moving average on an intraday basis, getting a bounce off of that. When the dollar's down, oil generally will be up. What is oil doing today? Does it following that trend like we talk about? Absolutely. Here's where oil ended yesterday. Here's where it is today, folks. Getting a nice bid up. Oil's up about $1 and change today. Gold is also higher by about $5. Now, that's not surprising. Whenever the dollar is weak, the market is going to generally get a bid off of oil and commodities, just the way it's been. In addition, tech is relatively strong today. Apple is a little on the weak side, down $1, but overall, tech is strong. The NASDAQ is actually percentage-wise leading things to the upside, up 16 to 17 points right here. So technology, very, very strong. Bank stocks are mixed. You do have Goldman up $1, but there are some stocks like Citigroup down a penny, Morgan Stanley down 51 cents, JP Morgan's up 24 cents. So you really see a mixed bag on these stocks. But one thing I'm noticing here, guys, look at the drop here in oil that's going on. This is going to put pressure on the markets, and I can already tell you, you show me a few of these charts, and I'll tell you exactly what the markets are going to be doing. And right now you're seeing a little bit of a pullback in the markets, most likely because oil's dropping. That absolutely has an impact on it, and it needs to be watched. Now you have to decide, is the drop in oil because the dollar is increasing in value, or because of a key issue with the demand structure of oil right now? Let's go back to the spiders. And you can see, look at that tail, guys. This is following oil. You got to follow oil. You got to understand the dollar. These will be the keys to what happens to this market. The rates are another issue. The yields of these bonds. The 10-year tomorrow is going to be huge. You have to pay attention to that one. If it goes off well, this market will surge higher. If it goes off poorly or not as good as expectations, you will see this market get hit very, very hard. So tomorrow will be a very, very big day in that regard. Alright, now notice this, guys. Nice little tail on this market off this little bullish flag pattern. You had a nice push to an extension. Now you're retracing back in here. We have to follow this candle to see. One thing that I can say today, guys, look at the volume today. Ever since 10 o'clock, 10:30, the volume has been non-existent, and that's enabled the market to float higher. That should also not be a shock to any of you that follow our videos. We often talk about how when the volume is light, it makes it very easy for the markets to be propped up. It's just the nature of the game, guys, and you're going into the summer months. For those of you that have traded more than a few years ago, anytime before really, I would say 2007, you really noticed how the markets were just dead volume all summer long, and it really enabled the markets to float higher for most of the time. After 2007, then you had the crisis starting, and it really wasn't that way anymore. But you're getting back into it. We've seen an extremely light amount of volume in this market, and that's enabling surges like we saw yesterday. I mean, look at the surge on this, guys. Buy program comes in. It's exactly 3 o'clock yesterday on Goldman Sachs, ExxonMobil. You got a little futures buy action program, and all of a sudden it created a short squeeze as billions of dollars were in the buy program here, shooting it up. Now, that's big money. Trust me. Trillions and trillions of dollars caused this spike on the spiders. It's an amazing amount of volume there, and an amazing amount of late-day surge in the short squeeze that occurred, whether or not it's mutual funds. Ultimately, to my belief, it is a lot of fund buy programs that come in there to push the markets up, and then really the short squeeze takes it off after that. So it's really kind of shady in my aspect, as almost every day we're seeing the late-day surge in buy programs to watch. All right. Let's talk some levels here. Let's talk about what we're expecting later this afternoon. As levels go, this is your big level in red across the screen, 94.40. That is a major, major level. We've been tracking this level for weeks now, and what you can see is every day the market somehow closes back above it. Look if you go back to last Friday, right here, what happens? We were below it here, and then into the close, they close us above 94.40. Monday, we gapped lower and traded all the way down to $93.20, $93 on the spiders, and then by the close, they ripped us up and closed us right on this level again, right in this range. Today, we gapped higher above it again, and then lo and behold, we're below it, and we come back above it. Watch where we close today. Do we close lower or higher than yesterday's move? That 94.40 is a very key level. We keep on going back to it. It's almost like a magnet pulling us back, or a leash in this market. Now, if you continue up, folks, the next level you're watching is a minor support, double top at the highs of the day from yesterday and today, right at $94.90 to $95. That $94.90 to $95 will be good resistance on this market if we continue up. After that, the major resistance line will be $95.20. $95.20 will be an extremely important net level for this market. A close above that would be the first real big close above that level, and we'd have to start watching to see if we're going to go back to the highs of the day, highs of the week from last week, folks, which were above 96, right around that 96 level. Alright, on the downside, and notice here now, interestingly enough, see this pattern, this in spirit of bullish flag pattern, this could be considered a failed breakout, and we have to watch it now. Now, the light volume still concerns me drastically, folks. Can't stress that enough. Ever since we were down here, we were telling the charts, and I actually posted on the free blog, nice bottoming tail, watch for the markets to trade up right on this candle, and sure enough, look at the move. But that's also an area of the fact that you have light volume in the markets, and it should not take a genius to know that if there's no volume in this market like there is right now in this market since 10 o'clock this morning, 10:30, the markets will probably trend up. That's exactly what they've been doing. Now, could we get a little bit of volume late in the day and it could fall down? Yes, that's possible, but it's also, something very close to watch. Now, what this could mean here is beautiful up candle leading into that auction, a little bit of a sell-off bullish pattern. You get the pop, but a failed pop possibly. Now, it's not 100% failed yet. It still could rise in this candle and go back to the highs, but if it doesn't and it stays red candle, this could actually be starting to tell us that there may be a failed little breakout there on that pattern, and notice the selling starting to come in here. So all of a sudden, we have a tail on top, which tells us sellers came in and slammed this market down, and could possibly be telling us we could be trading back down to support at 94.40. 94.40 will be a major, major level. If you get through that, look for the 50 moving average right here at 94.10, then 94. So 94.10 to 94 will be a major, major level. Look at this drop here. Great drop in this market, guys. Remember, traders are watching this. As soon as I saw this tail here, I started talking to you guys about a failed breakout. There's thousands and thousands of other traders that saw that, so you have to watch that. Now, I don't think there's going to be a lot of downside necessarily right away because you have support right here, but if it does break this support, you could easily go back to around 94-ish level here. But 94.40, guys, this is a major support. I have the line in there for all to see. We'll continue to follow that in a second. But again, on the downside, 94 would be your next spot. Minor resistance at 93.80, and then if you get through that, you could actually go all the way down to about 93.25, 93.20 to test that major, major support on the downside. But the dotted lines are minor supports. The moving averages I consider as minor for the most part as well, although 90 to 94, because there's two coming together here, will be major. And then on the upside, obviously 94.40, and then 95 20, 25 will be a major, major level. See how the market stopped right at that 94.40, guys? That's telling you there's a major level there, plus the 20 moving average. Got to be watched. This market's very, very fun to learn. I can't strongly enough encourage you to come join the Research Center to start learning. It's such a key to understanding and being profitable in this game. Join the chat room as well, the webinars. Go to the website, InTheMoneyStocks.com. We'll see you soon.